Hi guys, it's Stock Curry, and I want to do something a little bit different in today's video. I want to take some time to do some coaching and help you out and help you make some money in this market. I'm seeing a lot of traders make some really basic mistakes. So I want to help you out and give you a few questions to ask yourself, a few rules to live by that might help turn your portfolio around. Now, before we get into that, I want to kind of explain what's happening in the markets today because it's really kind of crazy, but it's also really important to understand. Right now, we, for all intents and purposes, appear to be at the very beginnings of a bear market. Now, some of you may have never traded in a down market before. All you know is stocks going up. Of course, anybody that's been around since, say, March of 2021, that invested in any of the stocks that YouTubers talked about back then, you're probably down pretty significantly in those stocks. But if you go back a little bit further than that, and we go back to March of 2020, we had a major downturn in the markets overall. And a lot of people think that what's happening right now is a lot like March 2020, that this is how downturns work. And unfortunately, that's just not the case. The March 2020 was a market crash. What we are in the beginnings of right now is a bear market. Now, a market crash and a bear market are both defined as a drop of 20% or more, but they're very, very different in the way that they actually play out. In a market crash, the market will drop by 20% or more in a very short period of time, anywhere from 1 day to 1 month. And the recovery is just as fast. The stock market will usually recover within a few weeks or a few months. In March of 2020, we saw the stock market drop 50% in 1 month, and then we saw it recover and go back to all new time highs within 2 months. So it was a very rapid decline and a very rapid recovery. In a market crash, the market pretty much just goes straight down for about 1 day to 1 month period, and then it pretty much goes straight up from there. In a bear market, it is completely different. A bear market, while it will also have a 20% drop or more, in a bear market, this will play out over the course of 3 months to 18 months. Now, because a bear market is a lot more sustained and prolonged, it doesn't go straight down like it does in a crash. In a bear market, we zigzag down, meaning we might have 3 weeks where the market drops 15% like it just did, and then we might have 3 weeks where the market rises 12 or 13 or 14%. And then it continues to go down from there, and then it will rebound and go up for a little while, then it'll drop again. And it's this big zigzag, like down 15%, up 12, down 10, up 9, down 8, up 7, and on and onward, but it's a zigzag downward. So you might look at the market and let's say it drops, say, 15% over 3 weeks like it just did, and then goes up 12% over the next 3 weeks, and you look and say, wow, over the past 6 weeks, it's only down 3%, no big deal. And you may completely miss the fact that it had this massive drop followed by this massive recovery before it continues dropping again. And that's happens not only over a period of weeks and months, but it also happens over a period of days. Today, we saw a 5% drop in the markets, followed by a recovery, and the market finished up green. If you didn't know what happened today, and you just looked at the end of the day, you're like, oh, the market's up 0.5%. You would have had no clue that the market dropped 5% during the day, and then recovered that full 5%. Now, here's just how crazy that is. The last time the market recovered 5% during the day and finished the day green was in 2008. In addition to that, the last time the market had this bad of a January was in 2008. What happened in 2008? Well, it was the last time that we had a bear market in the United States. So technically, all signs are pointing to another bear market here in 2022. Now, you may be thinking, well, we just had a drop. This bull market has barely been going on for 2 years. Are we really going to have another bear market right now? Well, bear markets, on average, occur once every 2.7 years, a little less than every 3 years. And of course, we had the period during the 1990s where the bull market ran 9 straight years. We had the period from 2000 or 2008 where we had a 7-year bull market. And if you exclude the market crash, we haven't had a bear market since 2009. So it really is due. We really are due for a bear market. Now, given that, where do I see the market going over the next few weeks and the next few months? Well, this week, I think the market is going to be green. I think especially when the Fed comes out on Wednesday, keep in mind that the Fed is having their meeting Tuesday and Wednesday, and then Jerome Powell is going to speak Wednesday. Now, we don't know exactly what time, but generally he speaks around 1 p.m. Eastern time. And so when he does start speaking, I think what the Fed is going to do is they're going to come out and they're not going to announce any rate hikes. They're not going to announce any selling of assets. They're essentially going to announce nothing. And I think the market is going to react very favorably to that, realizing that good, we're not getting a rate hike right now, and I think the markets are going to go up. So I think this week is going to be green. Now, I also think the next 2 weeks will be a little bit green, not nearly as much as this week is, but I do think the next 2 weeks will be a little bit green as well. I think the full recovery could be anywhere from 8 to 12% in the NASDAQ, so finishing anywhere about 3 to 5% off from all-time highs. Then, I think what's going to happen is in the middle of February, we are going to get the meeting minutes from the January meeting. So you might recall how back in December, the Fed had a meeting, and then on Tuesday, the second trading day in January, the meeting minutes came out, and the market did a complete 180 and just absolutely started tanking, and it's pretty much been going down nonstop for the past 3 weeks. And that's what I think is going to happen in the middle of February when the January meeting minutes come out. I think that the January meeting is going to be a big nothing. The market's going to love it. They're going to rally. And then the meeting minutes are going to come out, and we're going to see just how fearful the Fed actually is. And then the markets are going to start tanking again. Now, keep in mind that the markets are predicting anywhere from 2 to 5 rate hikes this year. Really, they're pricing in 4, but we could have anywhere from 2 to 5. Now, the big question is not whether or not the Fed is going to raise interest rates. Everybody knows they will. The real question is, come March, how much are they going to raise interest rates by? Is it going to be 0.25%, or is it going to be a far more aggressive 0.5%? That is still the big unknown. And that uncertainty is going to keep the markets down and prevent us from recovering from a bear market. It's what's going to keep us in a bear market and keep the markets continuing to fall after the next 3 weeks. So I could be completely wrong in my timing. Obviously, timing the markets is an extremely dangerous thing to do. But if we're going to do short-term trading like we are on this channel, we got to make some kind of prediction and just go for it. Could be wrong, could be right. You never know, but you just kind of have to go for it. So that's what we're going to do. I'm going to go off of the assumption that the market's going to be up for the next 3 weeks, and we're going to play it that way. Now, of course, I could be wrong. So it's going to be really important for us to set some sort of stop loss so that we don't lose our shirts if we're completely wrong here. And speaking of that, I want to get into a little bit of coaching about some of the big mistakes that I've seen traders make recently. So a lot of traders are coming to me now and they're saying, hey, Scott, I've got the stock that I bought January last year. I'm down 80% on it. Should I sell it? Should I hold it? What should I do? And here's one question that I ask, which nobody's ever able to answer is, well, why did you buy the stock in the first place? And the answer is usually, well, some YouTuber mentioned it. And that's obviously a terrible answer, because if you don't know why you bought the stock, then you don't know why you're holding the stock, and you don't know whether to sell or keep holding. You see, money is made when you buy, not when you sell. Before you buy any security, whether it be a stock, an option, or crypto, you need to know why you're buying that stock, option, or crypto. So the first question you have to ask yourself is, why am I buying this? Am I buying it because I think it's undervalued fundamentally? Am I buying it because the technicals are pointing to a rebound and it's going to start going back up? Am I buying because it's been going up and it's got really good momentum? I mean, why are you buying it? Are you buying it because you think it's going to short squeeze? Like, what is your reason? Why are you buying it? And the reason that's so important to understand is, once you know why you're buying it, as soon as your reason for buying changes, then you know when to sell. So for example, if your reason for buying is because it's cheap fundamentally, it's undervalued, and then it rises a bunch and it's no longer undervalued, it's now overvalued, well, now you know it's time to sell because your reason for buying is no longer valid. If your reason for buying is because you thought it was going to rebound and start going up, and then it failed to rebound and actually continued going down, well, now you know you can sell for a loss because your reason for buying is no longer valid. And if your reason for buying is because you thought it was going to go up and rebound, and it did, and now the technicals have changed and it's starting to go back down again, well, now your reason for buying is no longer valid. It's time to sell. Take profits. If your reason for buying was momentum because you thought it was going to go up, and it did, and now it's stopped going up, well, your reason for buying is no longer valid. It's time to sell and take profits. If your reason for buying was because you thought it would short squeeze and the short squeeze failed to happen, well, now it's time to sell and take a loss. And if your reason for buying was a short squeeze and the short squeeze did happen and the stock ran up 500%, well, it's now probably time to sell and take profits. So the first question you have to ask yourself before you buy is, why am I buying? And once your reason for buying is no longer valid, well, now it's time to sell. Second thing you got to determine before you buy is, when am I going to take profits? At what technical level, at what fundamental level, at what price target am I going to take profits on this? And when it reaches that level, whatever your take profit point is, no matter what, it's time to sell and get out. Because the last thing you want to do is have a stock that you're up on, that you're profitable on. Don't sell it and then watch it turn around, fall, and now it becomes a loser. At the same time, the third question you need to know before you buy is, at what point am I going to take losses on this stock? Because if you buy a stock and it doesn't work out, you don't just want to beg hold it forever and then a year later you're down 80% and you don't even know why you're holding it anymore. You want to have some point at which you take losses. It could be down 10%, it could be down 20%, whatever it is. I posted a tweet recently where I put as many stocks as I could before I ran out of space on the tweet. But it was a bunch of stop loss price targets that I had come up with earlier last year. And in every single case, the stocks were now down 60 to 80% below my stop loss price. Meaning my stop loss price may have caused a loss of 10, 20, 30%. But it's way better than being down 67, 80%. And that's the whole point of a stop loss price. It hurts to take a loss. Nobody wants to sell at a loss. But taking a loss is way better than bag holding a major loss. And the fourth question, well, not really a question. The fourth thing you have to do is this. When you do actually go ahead and buy that stock, write down why you bought it. Write down what your profit price is, the point at which you're going to sell and take profits. Write down your stop loss price. And then when you buy it, more importantly, after you sell it, write down everything that happened. Did your reason for buying work out? Did it not work out? Why did it work out or why did it not work out? When you sold, were you able to sell at a profit? Did you sell when you said you were going to sell? Or if you had to sell at a loss, did you actually sell when you said you were going to sell? Or did you just continue to bag hold it? See, if you don't know why you're getting in and you don't know what price you're going to sell at, then you're just gambling, you're guessing, you're hoping, you're speculating, and you're going to lose money in the stock market. Now, I'm not saying you're going to make money all the time. I've got plenty of long-term portfolios. They're down significantly. One of my long-term portfolios is down 18% this year. So I'm not saying you're going to make money all the time. But if you set these prices and you set these limits and you set these targets, then over time you will make money. But more importantly, you're going to cut your losses. Now, If you don't know your reasons for buying, maybe it's a bunch of stocks you bought last year and you have no idea why you're still holding them. Go in right now and ask yourself, would I buy at this price? And if you would look at that stock and you say, no, I wouldn't buy at this price because you either don't know anything about the company or you think it might keep falling, then I would go ahead and sell. There's no reason to keep holding something if you have no idea why you have it. However, if you do look at it and you say, you know what, I absolutely would buy at this price because I feel like it's really undervalued and I feel like it's going to go up, which honestly at this point is probably true for most of your small cap high growth stocks, which are pretty much all beaten down to severely low levels right now. If you look at that stock you're holding, you say, yeah, absolutely, I would buy at this price. Well, then you might want to just keep holding. But if you do decide to keep holding, I would definitely set a new take profit price and a new stop loss price. Now, all of that said, nobody is going to get every trade right. And you're going to make a lot of mistakes in this market. I make a ton of mistakes in this market. But one thing I will tell you is over time, if you stick to your rules and you have rules and you abide by them, you will make money in the stock market. So I hope that helps you. I hope those 3 golden rules of what you need to know before you buy will help you make money. Remember, you make money when you buy, not when you sell. Write down every trade you make, write down every reason for buying, write down your take profit price, your sell price, and when you sell, go back to what you wrote down in your journal and see if you did it right. See if you stuck by your rules. And if you lost a lot of money, see if you broke rules. If you didn't make as much as you thought you would, see if you broke a rule. But overall, you'll probably make money if you stick to your rules. And on the stocks that you're holding, you don't know why you're holding them, go do the thing right now, as if you were buying it for the first time, and decide if it's still a good stock to hold. And if it is, then figure out when you're going to sell. And if it's not, might as well get rid of it, free up some cash, and go buy something that's actually worth buying. Guys, I hope this video helped. If you want more coaching help, I do have a coaching program where I help people day and night and answer pretty much every question you could possibly have about investing in the stock market and how to make money. You can go join our coaching program. It's at stockcurry.vip/coaching. I hope this video helps. I hope you have a lot of success trading. If you haven't done so already, please make sure you hit the like button and subscribe and follow the page. I will see you guys tomorrow, and I hope you make a lot of money this year.